Hello everyone, how's it going? In this video, we're going to talk about MULLEN, trading under the ticker symbol MULN. MULLEN is a very exciting and interesting stock to cover because of its high volatility providing opportunities and the ongoing projects that may fuel the speculations even further. At the same time, it's a company that has a hard time proving to the market that its relevance is for the long term and not just the short term speculation. In this video, we will go through the latest fundamentals, the price actions, and my analysis, as well as my recommendation to hopefully help you make the best decision possible. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links down in the description, as every help is greatly appreciated. During Tuesday's trading session, the stock price of MULLEN continued to tank, in line with investors' expectation at large, to around 32 cents. And remember, this is after and soon after this reverse stock split. So it kind of shows the weakness of MULLEN at the moment. The market has a little interest in catching a falling knife, and it's quite easy to understand people for not doing this, which fulfills a self-fulfilling prophecy. In other words, MULLEN is likely going to continue to fall, just like it fell by 17% during Tuesday's session. And this is something that we really have to watch going forward to see whether this kind of tendency continues or stabilizes at some point. In the long run, the price is making new historical lows. And given that the stock has only recently gone through a round of reverse stock split, it means that the market really has very little faith and trust into the company, its stock, and the management, which again is understandable. MULLEN has lost more than 90% of its value since early 2023, mainly because the company gave people a sentiment that it is running out of cash and time, and may have a real chance for being delisted. I don't believe that the market is ready to see MULLEN as any part of a serious position taking just yet, because its future on the Nasdaq remains uncertain, and its going concern has also been put into question. In other words, we're not even sure that MULLEN can survive the current onslaught. Now, let's take a look at other technicals. The trading volume of MULLEN has recently been around 70 million shares versus an average volume of 46 million shares. Over the previous 52-week period, its price fluctuated between 41 cents and $42.75. This is, of course, the price after the reverse stock split. The volume of shares traded tells us how many shares are being bought and sold at any time, and if there is enough liquidity to support a trading strategy. If the float is very thin, it can be easy to influence the market, but with the low liquidity, the demand may also be very limited. When we compare the current volume against the average volume, there might be the possibility to spend trend reversals if the difference between the two are humongous. In other words, at the moment, there is no I wouldn't say that there's no likelihood, but there's a low probability for breakthrough. The market cap of MULLEN is currently around $74 million versus the enterprise value of around $48 million. When we compare the current price to the historical price fluctuation, the stock is currently making historical low, but I would say that it's around 1 to 2% above its 1-month low, 1 to 2% higher than the 3-month low, and 1 to 2% higher than the 52-week low. On the options market, which gives us a hint about the market sentiment on where the stock price is probably going to head next, the implied volatility is 271% versus the historical volatility of 132%. The put-call volume ratio is currently at 0.49. It's normal for most stocks to also tend to have a higher put option volume than what they deserve because many institutional investors hedge their long positions by buying put options. The most recent volume of options traded has been 45 contracts within a day, compared to the 30-day average volume of 33. In terms of open interest, the most recent volume of open interest is 1.1 million contracts versus the 30-day average of 1 million contracts. About the shareholder structure, institutional shareholders own about 150% of the stocks. This is a result of the short selling that is ongoing. The biggest shareholders include Vanguard, BlackRock, and iShares. Typically, it's better to see more institutional participation in a company. However, in this case, it might be a little bit different. I think that this kind of participation is highly irregular for a company like Mullen, and especially in its current state. This is why I wouldn't be surprised if the real institutional participation that really wants to see Mullen going long for the long term is pretty low. The current short interest is around 17% of the total float, 57% of which coming out from the dark pools. So, usually if the short interest is above 15%, I would say that there's a potential for short squeeze. However, we have to remember that about 4 weeks ago, people were saying that there's a possibility for Mullen to go, to have a short squeeze, just because it's so low, and at some point, there's only, there will be a limit as to how low things can get. Well, I would tend to disagree. I don't think that the short squeeze is going to happen for the time being, just because the fundamentals are giving motivation for people to continue dumping their shares. Mullen is an American EV manufacturer that has known several different iterations over the years, from Mullen Auto Cars to Coda Automotive, and now Mullen Automotive. On paper, it is one of the companies with the longest continual existence in the EV sector, way before the current giants began to blossom into people's mind. Mullen has tried over the years to gain traction by launching new products and announcing new partnerships in order to attract more capital in the sector that requires oh so much money in order to keep the ship afloat and the operations going. Does this mean that Mullen lacked the capacity to stand on its own feet? Yes. Does it mean that Mullen is so struggling to find its break-even point? Without a doubt. In fact, if anything, there are reasons to believe that Mullen is now facing challenges that are even bigger than the issues from the past. People may have stopped believing in it, and the market has questions about its long-term sustainability. For example, people are sensitive to the CEO's reputation, the nomination of his associates on the board, and that a company has developed no substantial products so far, despite repeated announcements that they have done so. These aspects are not necessarily new. What is different with Mullen this time is that even its announcements seem to attract less and less reaction from the market. And for that, we have to look at the management's past choices along with the global macroeconomic trends to figure out the causality. Mullen has had a habit of disclosing as little information as possible to the financial market, and that sometimes it even chooses to omit significant details like the identity of key partners and clients, as well as the financial health or even the existence of their key suppliers, such as the company manufacturing Mullen's batteries, which was advertised as one of the better ones in the industry, prompted its price to soar by more than 120%. Despite the fundamental and reputational challenges, there are two major elements that justify the continuing interest that people have in Mullen: volatility and short squeeze. Mullen is a small cap that is currently priced around its historical low. From a probability-based perspective, this would mean that the likelihood of the stock to go upward is far higher than to reduce from 20 cents to zero. After all, there isn't much space to go further down, whereas the logical development would be to reach higher levels when the timing is right. This would, of course, assume that Mullen somehow managed to continue its operations, or to at least maintain the going concern. This brings us back to the price volatility argument mentioned previously, whereby small caps have a tendency to experience irrational moves and sudden surges in both price and volume. If a certain number of traders decide to pull in, then from a percentage-wise perspective, this kind of price action can be very, very attractive, because a mere 30 cents increase can mean that the stock would increase by more than 100% from its cost basis. Mullen has obviously been greatly impacted by the ongoing market-wide bearishness, perhaps even more than the rest of the sector due to the lack of any substantial product in play and the absence of clear objectives. I don't mean that a company doesn't share any news announcements, but simply the fact that the public doesn't seem to take them seriously enough to reflect these in sales volume. The volatility seems, therefore, to be random for the most part, with some correlation to be predictable with Nasdaq recoveries and the conversation trends in online discussion. These online discussions are one of the keys to really understand what makes people buy or sell Mullen. Since retail traders are by far the biggest category of Mullen shareholders, these decisions often happen on a whim, with the assumptions that the stock may have massive redemptions in its short seller ranks, whether there seems to be a lot of tractions on a specific topic, and if there seems to be a sudden uptick in the number of conversations surrounding a specific topic about Mullen. These are highly random, or way too unreliable to be a determining factor, or so it seems. But if you think about it, how do most retail traders make their decisions? Is it really the fundamentals, the long-term tendency of an industry? When we're talking about Mullen, a small cap with doubts that they have more hustlers than genuine entrepreneurs? I mean, really, can we really tell whether the announcement of iGo in Europe would create a massive spike in the beginning, but barely any reaction when they actually began distributing? Or perhaps more telling than these two cases is the fact that Mullen share price tumbled by 60% shortly after they announced that they have managed to reduce the company's debt by $13 million, which is huge for a company of that scale, increasing greatly the company's likelihood to survive. But with all those announcements, I haven't really seen a logical reaction, and possibly because the focus is not dictated by logic or any sound business analytics, but by online chat rooms and forums. Therefore, I think that a key factor to take into consideration when trading Mullen is to accept that we are here as short-term speculators on a wobbly stock, hoping that there will be sudden price jumps to justify a participation in the equity. The overall impression regarding Mullen is that it is a company with clear tendency towards speculation, with large potentials of profit in terms of percentage, and mostly relies on irrational factors to boost the share price. I would recommend to commit between 0.5 and 1% of your portfolio in Mullen, but really, for the time being, it is much better and smarter to stand on the side. 1% is the absolute maximum that you should commit into Mullen at all times, and certainly not when it's still falling like now. I would also recommend to split the allocation in small batches over a certain period of time, in this case 3 to 6 months, so that you can purchase more if it retraces.